We're just going to get started on the pitch event. Hi, everyone. I am Melissa from Blockchain Founders Group. I am the Marketing and Partnerships Manager, and welcome to our monthly Web3 Startup Pitch event. So whether or not you've been with us or you're joining us for the first time, we're excited to spend the next hour together with you. So we run these monthly pitch events to curate and showcase the interesting Web3 startups that we come across. And we'd like to provide you with a platform to pitch your ideas and share with the community. So just a quick background about Blockchain Founders Group before we get started. So we are a team that drives Web3 innovation. We are more commonly known as a company builder, and this means that we bring together a team of blockchain visionaries, experienced entrepreneurs, industry experts who are committed to nurturing emerging talents. And so we work with Web3 startup teams and founders to develop their businesses. So our incubator and accelerator programs serve as a springboard for launching blockchain startups and transforming, these concepts into reality in just 2 to 3 months. So we are helmed by a team of experts on our board of directors and executive partners. So they have a deep understanding of the blockchain industry, and I think combined, they have a lot of entrepreneurial know-how. And so you might also be familiar with some of the members of the team who work closely with the startups. So they guide, mentor, coach these startups through our programs each year, taking them essentially through the entire process of building their own startups from scratch. So I do know that we are all looking forward to the pitch event. So let's get into it. For today, we have three judges with us. We have Max, the investment manager at Outlier Ventures. We have Nirmal, the Chabria, an advisor at Antler. And we also have Martin Seabrand, who is a mentor at Techstars. So I would actually like to bring up the judges and get them to share a quick introduction about themselves. Max?
Hi, everyone. So I'm Max. I'm investment manager at Outlier Ventures. There I oversee the investment process from thesis formation to investment. For those who don't know what Outlier Ventures, we are an accelerator with more than 300 startups in our portfolio. We help them raise more than $400 million at seed and pre-seed stage. And what we offer to startup is capital. We usually offer 100 to 200K to startups. We offer supports on token design, tech, marketing, business development, and token launch. And we also have a perk package worth $200K from our cloud banking and development tool partner. I'm excited to be here and to see the pitches.
Thank you. Martin?
Yes, good morning. Martijn from Amsterdam, working as a Techstars mentor within the team of digital assets of ABN AMRO. Within Techstars, we look at digital asset startups and also sustainability startups, so in the combination. From ABN AMRO Digital Assets, maybe I've seen we recently did the digital green bond, a tokenized one with institutional clients of ABN AMRO. And we also done one with mid-corps and wealth clients. So looking forward to the pitches here because they touch upon this topic as well. So thanks for the invite.
Amazing. So thanks for that. Today we are very excited to have 5 startups with us. So we have Trade Together, Reality Near, Huros, Tax, and Raise. So now I will quickly introduce each of the startups. So first up, we have Trade Together. They are a platform which enables customers to do micro investing in cryptocurrencies and digital assets. Next, we have Reality Near. They are a community-based metaverse platform. And third to pitch today is Huros, a watch co-ownership platform that utilizes the power of tokenization and AI analytics. So fourth to pitch today is Stack, a debt for financing live and creative productions. And so fifth and finally today, we have Raise Farms, who are using Web3 to develop a network of vertical farms to create a decentralized food system for communities around the world. So each of these startups today will be given 6 minutes to pitch, and they will face 5 minutes of question and answer. So they will first take questions from our judges, and then we will open up the floor to the audience for some questions. So quickly running through the judging criteria. So each startup will be evaluated on each of these criteria. First would be market potential. The startup will be judged on whether they have identified a genuine area of interest and whether their proposed project is effective in addressing it. Next, technical feasibility. We're talking about the startup being judged on how well it integrates blockchain technology into its project and whether the technology used is a relatively novel application. Third, the scalability of their business models. The startup will be judged on how scalable their business model and growth plans are from a regional to a global level. And lastly, the strength of the founding team. The judges will be evaluating how well these startups are equipped to deliver the projects with their educational background and past experiences. So without further ado, I would like to welcome Geoff and team Trade Together as they pitch.
Thanks a lot, Melissa, and good evening, good afternoon, everyone. Let me just share my screen. Okay, can you see my screen?
Yep, we can see. The countdown timer is on my profile. You do have 6 minutes, so
Wonderful.
whenever you're ready.
Wonderful, thank you so much. Meet Jack. Jack is a credit analyst living in Singapore. Jack has invested in the crypto space and in the financial industry for 5 years. He has been pretty savvy when it comes to invest in classical securities and bonds and also cryptocurrency. He has really enjoyed himself looking at various types of protocol over the past 5 years, but it is true that 2022 has been pretty difficult for him. He has tried to stay on track with what happened, but lots of issues with a couple of protocols has really created a lot of uncertainty for him. And he also has to go with his own life, and he can't really take care of his own portfolio right now. So as a result, the past 2 years have been really difficult, and he has not been really on track to do the necessary arbitrage. He has also heard about new opportunities, in particular in RWA and tokenization, but it's just too much information. On top of that, the cybersecurity is really the type of vulnerabilities he fears. He doesn't know really how to protect his wallet. So Jack is looking for a specific expert looking at his portfolio and allowing us to invest safely in a compliant manner, and most importantly, because that's important for him, based on his risk tolerance and risk appetite. We are Trade Together. We are allowing investors like Jack to invest in the cryptocurrency sector safely, based on their risk tolerance and risk appetite. And let me show you how it works. I hope you can see the other screen. Trade Together, can you see that? Yeah, you see it's just...
No, we're not able to see. We
Okay,
can only see the logo.
Okay, wonderful. Let me just share that with you. Wonderful. Okay.
Yeah.
So that's pretty simple. Jack has to go to our website, which I also invite you to go after this session, when he will test his risk profiling, so that by doing all the information collected through our website, we will know exactly what's Jack's risk appetite. From there, Jack will have to sign up his risk profiling, will have to do the necessary due diligence, which is a necessary evol, and once completed, we will provide Jack's credential. Once the KYC completed, Jack will have access to a basket selected curated solution for him, allowing him to invest, to monitor his assets, and also to do the redemption whenever he wants to redeem his funds. So that's really what we do at Trade Together, and let me show you what we've done so far. So our very first strategy was launched in 2021 September, and it's called Stable Growth Staking. look at it as a money market fund, but in the Web3 space, knowing that at that time in 2021, there was no tokenization of bonds. So we were looking at qualitative layer 2 where to invest. In 2021, we managed to generate 19%. In 2022, 4.87% because of the November nightmare linked to a very well-known crypto exchange. This year, we should end up with a stable growth taking at 10% on average. We have also launched a Trade Together Bitcoin Advantage Fund. Look at it as a Bitcoin ETF, but with the advantage that we hedge you in case of a Bitcoin drop. So that's really our cutting edge solution and to stay competitive with the incoming ETF from a large financial institutions that everyone knows here. Trade Together Digital Bonds Offering, one of the most exciting type of products that we have working on over the past 2 months. So this one is a Hong Kong entities. It's a conglomerate, 50 years entities. They are listed in Hong Kong Stock Exchange, and they have pivoted some of their domain in oil and gas into renewable energy. They've tried to finance their project with some large institution. They've been financed at 12%, and this is where we are providing the difference. We are proposing at 10%. We've done all the credit risk assessment. They have a rating at B. They are over-collateralized, which is also good for us. And as a result, we propose that to our medium risk client. Every 3 months, every quarter, you get a 2.5% coupon. This one is another interesting tokenized bonds that we've done on the corporate debt. It's a sustainable project with an entity, Keen, who's working to fix the supply chain food waste. And it's an amazing company, amazing team, and we are supporting them. We've closed that deal last week, just before the Singapore FinTech Festival, and 14%, also an interesting one. And we've done that 100% USDC with our partner Circle and on Polygon. Yeah, so that's how we help Jack, and which is really essentially the B2C part. But guess what? We have also sought to do the B2B. I'm going to share that with you soon if I have some time left. Deposit fees.
No, don't, sorry. We're out of time.
Wow.
Yeah.
Out of
We'll
time.
just move into Q&A now. Thanks very much for your presentation. So I'll just
My
bring
pleasure.
up the judges. Max, Martin, do you have any questions?
Martin, are you going ahead or because you unmuted yourself?
Oh, sorry, I was still.
Okay, no worries. I can go ahead, Geoff. Thanks for the presentation. I'd be curious to know, in the existing strategies that you have tokenized, what is the current existing deposit, or is it in the existing deposit level on the platform overall?
Yeah, so far this month we are approaching 16 million US. So in trade volume, because remember that we have our very first stable growth from staking, where we have a little bit more than 600K in AUM. But at the same time, we are doing digital bonds. Some of the deals are at US 7 million, others at 2 million, 400K. So we have placed 16 million so far. And the demand, it's keep growing. And it's not only the pre-bull market. We have lots of demand for that in Asia. Yeah.
And then quick follow-up, it would be good to know a bit like how you source these opportunities and what's your background in this space. Because if we invest in the platform, then basically you're effectively buying into the ability that you would have to constantly find these opportunities with decent amount of return, decent amount of security, and at the same time be able to tokenize them, right?
Yeah, wonderful. So I'm not sure what age you give me, but I'm 42 years old. I started my career in 2008 during the global financial crisis, which is a lovely year to kickstart your career in the financial industry. My last role was a chief risk officer for a venture called Autumn. I live in Asia since 12 years. So I have a strong risk, cybersecurity, credit OTC experience in the financial industry, and I have lots of partners. We have partners with my co-founder Jordan Co, well experienced in origination. And whenever we have a new deal, which is what we did also for all the year two, we have our executive risk committee when we're gonna provide a risk scoring from 1 to 5 based on the credit risk, market risk, liquidity risk. Depending on the product, we're gonna establish some notes, and of course on the corporate debt, the digital bonds, we need to make sure that the collateral are there. So that's really our job. So far, we have 0 default. At some points there will be, because there is nothing perfect. But so far we have not encountered any defaults. So I think we have a pretty robust track record.
All right. And then last question from my side, how do you view competition considering there's already a few protocols that are active in the space? I know the market is very broad and can be segmented across different instruments and different geographies. But I would say like, if I want to invest in, if I want to basically deposit some capital, I'll probably go with a protocol that is as proven as possible. So I'll probably look at Goldfinch, Maple even. How do you see that competition?
I think it's good to have such type of competition because, first of all, it shows that the direction where we are is a good one. Number two, I suspect what people like with us is our transparency and traceability. I think so far what we have shown in terms of proposal, I have not encountered any default. Number two, we are generalist. So we are not only proposing digital bonds, we are also proposing state digital bonds, and in Asia, and I'm sure in Europe it will be the same. There are lots of demand for low risk tokenized yield. We are working with a couple of crypto exchange, traditional telco pivoting to a digital wallet, keen to get a low risk at 3 to 5.5%. So I think it's good to have competition. When we started, we were not that much. It's good to have other players, and we don't see that as a risk. Honestly, there is enough work to do here. Yeah.
Thank you, Jeff. No further questions.
Thank you.
Right. Thanks for the pitch and the insight. If I get it correctly, you have more or less 2 propositions. So one is on the crypto side to help the investor. Another side is to create the digital bonds and to bring their 2 parts of the value chain together. And also, of course, the investor from crypto can invest in a digital bond, I expect. From a business model perspective, which of the 2 is most profitable at this moment?
So this month, I'm proud to say that the most profitable is definitely the digital bonds. And on top of that, Martin, I will add that the 2 digital bonds that we've issued and completed are either green bond or sustainable bonds. So there is also an ESG element, which is good, because when we started in 2021, it was so tough to propose this type of product because it was still at the stage of infancy. And now we can make good money with that. And on top of that, it's pretty positive. That's the direction that we want to take. It's a COP28 with starting in Dubai. So I think this is really, there is appetite for that and it's profitable. Yeah.
And can you tell a bit about, we have to judge also on the technical feasibility. I know the platform is there and it's live, you're doing your deals. But can you give a bit of insight under the hood of the platform?
Yes, of course. So we started initially with a digital wallet compatible with ETH and BSC. And we found ourselves doing risk assessment across hundreds blockchain, layer 1 and layer 0, layer 1, layer 2. And now we are pivoting to a direction where we are working with several layers, regulated FI using ERC 1400s for tokenized bonds. Edera we are also working, trying to do some tokenized bonds on Edera platform. So everyone has his own layer 1, so we are pretty agile. But the main base is ETH and BSC because we started with BSC and ETH. Yeah.
All right, thanks very much for that, Martin and Max, and thanks so much, Jeff. We do have to move on to the next startup now. Can I bring on Reality Nia? You can go ahead, share your screen, and
Hi,
pitch.
Melissa. Hi, everyone. You heard me?
Hello. Yeah,
Hi.
we can hear you.
I'm going to share my screen. You see my screen?
Yes.
Okay, perfect. I'm going to begin. Hi, everybody. My name is Jairo Amaren. I'm the CEO and co-founder of Reality Near. Reality Near is a digital ecosystem that connects brands with communities in LATAM. The problem, we understand that shopping centers around the world stop being a point of sales and become a meeting point. Brands do not connect well with communities. There's some failings, and they are losing market shares and trust. Our solutions, we create these digital ecosystems where users can connect with brands in an immersive space. We are focused on communities generate economics, education, and social values, supported by different brands. We take advantage of all distractions to be the bridge between communities and brands. At this time, we have more than 2,000 users. We are growing plus 30%. But the most amazing thing is that people are using more than 2 hours our platform every time they go inside. We create two things. For one side, we create the Pokemon Go for brands. Is the handle promotion, discounts, and price in real life with AR, and this help to brands to generate sales, to have an immersive and different experience with users. And for our side, we'll create the metaverse. In this metaverse, gamification metaverse, we create space for communities where they can connect, interact, they can study, they can work, and they can buy for brands. For our side, brands generates a new channels to get ads, a new channels to generate sales, and have a immersive face to connect with these communities. Our sales now are growing plus 30%, and we have a buyback of 95% in a subscription model of 6 or 12 months. In our white paper, in our community, we create a tokenomics. We're very focused in create a utility token because we are merge reality and technology. Our focus is that people can use this in his real life, but make it very easy. The market side, the TAM, McKinsey say that this is like 2.5 trillions. We are focusing LATAM. Our SAM is Mexico, Colombia, Peru, and Chile. Is 2,000 billions. And if our sum, if we generate 1% of Mexico, Colombia, Peru, and Chile, we are talking about $2 billion. Our business model is very big because we have subscriptions in a model of B2B for brands. We have advertisements, we have gamings, we have rent and sales lands for B2B and for B2C, supported by blockchain, creating a space, and our tokenomic. Our team, well, I'm the CEO. I have more than 20 years of experience in retail and retail business. I'm full stack developer and chief digital officer by MIT. And now I am judge and mentor of Stanford AI Web3 Research Lab Association. My co-founder, Damian, is a graphic designer, specialized in branding and generator of games. And he have a master of marketing. We have a team of 8 people. In this team, we have Jonathan, our CTO. I write all the code because I love to be a developer, but Jonathan is amazing in this part. We was accelerated and supported by NEAR. We received a grant of 1,000. No, 1,000. We received a grant of NEAR in 2021. We was supported and accelerated by Platzi and for Impact VC. Our focus is try to break the cycle of poor, generate a real value for the users. Community, well, we was in conference, we was in national TV, but something that for me is important to tell, I am super runner of in the world champion of Luta Libre 2022. And I say that because we know that difficult to be the winner in the world. We know how to make things and try to make that it happens. Our investment pre-seed round, we are asking for 15K for the 10% of the company. With this, we are going to spend 35% in marketing and 65% for operation. At this moment, we spend 0 in marketing. And with this, we are focused to try to, in Q1 and Q2, be operating in Peru. I'm from Peru, in Mexico. Today I'm in Mexico, for me are 4 a.m. and open in Chile. Well, what we are a digital ecosystem that connect communities and brands. Here in Latam, people are spending more than 2 hours using our platform every time they get inside. We have a retention of 75% of users, and we are growing plus 30% in our sales. We know how to create this technology. I created retail. We live with this problem. My family are the control group of a international holding of shopping centers. That's the reason I understand this very well. And sales, we have the network to sell. Thank you for your time.
Thanks very much, Javier. I'll just pass the time to Max and Martin if they have any questions.
Yes, thanks for the pitch. I was wondering, you showed your users. You say you have the sales network, but how do you grow your users? So there's no marketing involved. I expect I need to have a VR reel to become a user. So how do you see that?
To say the truth, at this moment, we are not growing more in our users because we are focusing fix a lot of technical users. We create a big MVP and we taste a lot. We break a lot of code. But the first strategy we have, we are closing with big brands. Now we are building the first street mall inside our metaverse, but real street mall because Jockey Plaza is the name of this, have 1.3 million users monthly, and we create all this shopping center here. No, we are expected that with this we are going to grow, and with our brands that we are merged here. No, yes, we are going to spend money in marketing, but in this new stage, we prefer to be really connected with users to try to understand what they really want, how we need to break this code and create something that make value. Because our focus is try to generate a real value in education and economic opportunities here in Latam, but merging reality with technology. That's the reason we are using blockchain, because that's really make it. But we understand something very important. Blockchain is very confused for people in the first time. We are trying to make this very easy, like blockchain in the back end and in front end, more like Web 2, like something Web 0.5. No?
All right, thank you for the answer. I have no other questions. So Max.
Thanks, Javier, for the pitch, and thanks for waking up so early. It would be great to understand a bit more about like the statistics, the stat that you had about the 2 hours log time from your users. Like, how was this measure? What does this measure concretely? What are these users doing during 2 hours?
Yes. I think that's the most important thing in our pitch is why people are using these 2 hours. And it's in hand to hand to try to understand that we have a rotation of 75% because we have a lot of problems in our platform, but people really understand that they are generate a value. What we create a lot of conference and educational things here inside our metaverse and digital ecosystem. How we can make it? I am very lucky because I have very good friends of MIT, Stanford, and other sites, and we say them to make a master class and made inside event. This master class can have a 1 or 2 hours of time inside, and people come and they can go and connect with the metaverse. For our side, we connect with friends and they make different activities and make people using more and more. But for 2024, we are expected to grow this time for 2 hours to go to 3 or 4 hours. The principal reason is we are going to activate more, and we hope that in this month of December, we're going to fix a lot of problems technological and things that people really say, okay, this, I don't like this. I think that this is important. Okay, this thing is like for the next year.
Okay, very clear. Thank you.
Thanks very much, Max and Martin. Can I check, are there any more questions? Or are we? All right, thank you very much. We'll just bring on the next team now. Thank you very much, Javier. We'll bring on the next team, Glenn and Vernon from Huros.
Okay, give me a moment. Let me share my screen.
Sure thing.
I hope everybody can see my screen.
Yeah, all right, whenever you're ready.
Thank you very much, everybody. Thank you, judges. Grateful to be here. My name is Glenn. I'm the co-founder of Huros. Huros is developing a new way to revolutionize timepiece ownership. But first, of course, let us demystify the luxury watch market a little bit for people who perhaps may not be too familiar with luxury watch trading. The watch market itself, for popular watches, some watches have an ROI that's up to almost 300% in just 6 years, which is why we know that watches can outperform traditional asset classes like gold, like real estate, as well as stocks. And the luxury watch market is still poised to grow up to 63 billion by the end of this decade. So what Huros is doing is using the concept of RWA tokenization to provide fractional ownership for our users to buy into luxury watches as an alternative investment asset. And it's because of this capacity and this capability of luxury watches, which is why we believe that luxury watches are the right asset class for entry into this new tokenized economy. But luxury watches itself also has problems of its own. Namely, of course, price points. The barrier to entry is typically quite high for retail investors. Not everybody can spend 10,000 or hard thousands or millions of dollars to buy into a luxury watch itself. At the same time, watches, so many brands out there, so many models. It's going to be very time consuming for people to learn and decide which is the best watch they can go into as an investment class. And on top of that, we also know that in the market today, there is a growing counterfeit market, and this makes it a lot more difficult for people to authenticate luxury timepieces as well. So the solutions that we want to propose, we need a platform that's able to allow anybody from various backgrounds to very easily invest in and trade in luxury watches in a manner that's familiar, that's friendly to them. And of course, we want the platform to actually do the homework for our users where there's a curated collection of luxury timepieces that have strong investment potential, both historically as well as future projected. So we also want a platform to guarantee the authenticity of luxury timepieces, and we will store these authentications immutably onto the blockchain itself. So here's Huros itself. We are developing the world's first watch co-ownership platform that will tap into the luxury watch market, utilizing the power of asset tokenization together with AI analytics. So AI has a touch in our project because we want our users to be educated and to be able to understand and analyze the growth and the trends in the luxury watch market itself. So our platform itself, we have 3 main features. We have a digital boutique. This is where we serve both the traditional watch collector as well as the retail investor who wants to buy into luxury watches as an asset class. The digital boutique comprises of luxury watches that we curate with high investment potential. And when users buy luxury timepieces from us, we also give them that enhanced layer of liquidity because users can very easily trade fractions amongst each other on a secondary marketplace or P2P marketplace. So here they have high liquidity over their exits and we do not lock in their positions. And last but not least, for timepiece collectors themselves, Huros offers a unique feature in allowing them to monetize timepieces that they have. So we will actually co-own, create digital tokens of rare and limited edition timepieces from collectors, and we allow the community to actually trade on these timepieces, which generates dividends for its collectors and its owners as well. So for the business model of Huros takes a sale commission for each time a fraction of a watch or a watch itself is sold. And being a luxury watch dealer ourselves, we conservatively take a 10 to 30% profit on arbitrage for each timepiece that passes through our platform and is offloaded to a final buyer. And of course, when people want to come to us to tokenize their luxury watches and of course generate yield of their collection of watches, we charge a tokenization fee. So this will actually be determined based on the rarity of the model and how limited the model is itself. And our AI is a benefit to our user bases who want to further understand the watch market. So this is through a subscription model where we have the access to this oracle that will give them a future price projection based on our machine learning model as well. So looking at the market size of things, right now, RWA tokenization is gaining traction very recently. We're looking at a 16 million market size today, but this is still very conservative because we are in the very early stages. Right now, the market itself is projected for asset tokenization to grow to a very staggering, almost up to $10 trillion by the end of the decade. And luxury watches itself, even without the added liquidity layer of fractional ownership, is already poised for 63 billion. So we're excited to grow together with this new market and of course this new emerging technology that's here. So because we're sort of in the middle, of two different fields where watches itself are very traditional and we're pulling in the blockchain aspect to help tokenize our luxury watches, we're in the middle of both realms. So we do have competitors from traditional Web2 marketplaces as well as certain other Web3 projects out there that perhaps also offer tokenization and fractionalization features. But on top of what we offer, we believe that we give this competitive edge over other Web3 projects and Web2 marketplaces by giving, a very dynamic and continuously interactive marketplace for people to own and monetize what they have, not without being locked in and having a strong community governance over the community's portfolio of timepieces when they own fractional ownerships through us. So going a bit more into the founding team, I am a luxury watch trader. I've been trading watches since 2016. I'm very ably supported by Vernon, who is my co-founder. He has a very strong background in business development, having expanded and closed startups from Vietnam to Singapore itself. We're also very ably supported by John, who is our CTO, who has a strong background in fintech. And of course, core contributors, we have our team members who are very active in aiding us in outreach and partnerships, our machine learning full stack, as well as our blockchain developer. And at the end of the day right now, just to run through our timeline, we're still in very early stages. In fact, Huros was incorporated only quite recently in July this year, so we're still in early stages of development. We are looking at a soft launch by February, but really projecting ahead to where we envision Huros. We want Huros to be that brand name in luxury asset ownership, and of course, to diversify this more out of reach assets to the masses, through fractionalization, through tokenization, and ultimately be that brand name and get go-to name for establishing that tokenization standard for assets and asset management itself. And that is us.
Thanks very much for that, Glenn. We'll just move past the time to Max and Martin for any questions.
I can start. Thanks for the presentation. This is a market I don't know super well, but I know there is like other companies that are tokenizing basically also art and other type of collectible. I know there's like this company called Masterworks that basically has quite a lot of assets under management. It would be good for as a potential investor to understand like how do you see them and how do you understand their success in growing something that is, I understand, a bit difficult to scale in the sense because you need to acquire the underlying asset, you need to store them, you need to have an insurance. And so how do you think they manage to reach such a scale and give us a sense that you basically are able to also potentially get there with the watches?
Thank you very much for the question. I appreciate it. Yes, we are very aware that Masterworks is like, I keep seeing the advertisements all over as well. So we would say that watches and fine art, like luxury watches, are very different assets. When it comes to things like Masterworks, we would say that we are very different in terms of how we offload these timepieces versus art. So for Masterworks, how they work is because when you invest into a fraction of the fine art, they hold it for a pretty long term. Whereas for Huros itself, because we're dealing with luxury timepieces, and luxury timepieces historically, from my own experience as well, they can actually flip or be offloaded very fast. So that is the aspect that Huros is relying on. We traditionally can actually sell timepieces within 3 days or sometimes up to a few months, depending on the model itself, which is why Huros works to curate a collection of very highly investable timepieces. So we do not wish for users to actually buy into the fraction of a timepiece itself and then end up having to wait like 5-6 years for it. So we say that we are targeting the quantity of the trade rather than the quality over time. So that's what we actually make up for that difference itself. And Masterworks, I'm not too sure what their underlying technology is, but for Huros itself, we are using NFTs to asset back our fractions itself. And that's also how we trace that authenticity. I'm not too sure how Masterworks works on that, so I can't really comment on that. But to conclude, that is essentially how we're going to do it. Our focus is on the quantity of the timepieces that will be traded in order to reach that trading volume, leveraging the historical and future projected values of timepieces.
All right, clear. Thank you.
Thank you.
Thanks, Glenn, for the presentation. Can you help me a bit? So I own a watch. I go to your platform, I subscribe, and I'm start to look if someone would like to invest in that watch. Is that the case?
That will be the case for yourself as a timepiece owner. Yes. For our platform itself, how we work is heroes will actually first own the timepieces for our community to own. So for collectors like yourself, yes, if you have a timepiece that is rare, that's more limited edition, you can come to us. We will tokenize your timepiece for you. Of course, there will be the contractual and legal and insurance done to ensure that, you get to retain ownership of the watch, but we help you monetize that timepiece. So yes, that's essentially how we work. Yeah.
And for the others, Heroes owns the watches, so they are in a safe. So I can trust that the watches are there, and you do a check also on the authenticate of the watches, etc.
That's right. We are actually planning to ultimately have a showroom where our users can actually know that we are a physical entity. Anybody can actually come down to view the watches itself. But at the end of the day, Heroes, in order to really meet or rather really reach scalability, we have to go asset light or even asset zero. So that is where we're actually setting the foundations right now to be partnering with luxury watch dealers. And we have started onboarding some of them in Singapore already. So when the platform goes live, these are watch dealers that will co-share inventory with us. So, the liability is on the dealers that simply use our platform to tokenize and fractionalize these timepieces. So that way we also reduce the liability on our own platform itself. So we become that tokenization platform for timepieces rather than having to always host and be so asset heavy.
Okay, thank you. That was my question.
Thank you.
Thanks very much, Martin and Max. Do you have anything else for the team? All right. No. Thanks very much, Glenn and Vernon. Enjoy your presentation.
Thank you very much.
We'll now move on to the next startup, Stacks.
Thank you, Melissa. Good morning, everyone. And thank you for being here. And thank you also to Blockchain Founders Group for the spotlight today. Is my presentation live? Good.
Yeah,
okay, thank you. Thank you. Yeah, my name is Luis Martinez. I'm CEO, co-founder at Stakes, and we're all about enabling creatives in Web3 with a special focus on the financialization of their underlying assets. The problem that we solve is strictly a financing problem for creatives. We understand that they need not just to sell NFTs for the sake of creating a new stream flow, but rather sell and use the technology, sell NFTs or use the technology for funding future art and work. So also, as a lateral problem or a related problem is a diminishing fan connection that we see in Web2 platforms. This mostly relates to the limitations of streaming connectivity between fans and their audiences. They don't have the ownership element that Web3 brings, basically. So our solution is to provide a platform to precisely solve the financing element, to allow these creators to have more funds to focus on more art more often, while at the same time being able to build their 1,000 true fans. We very much lean on this 1,000 true fans from the Variant Fund and Jesse Walden, and well, this comes back to for a few days. So this is basically the solution that we pursue to be an enabler of the 1,000 true fans orchestrated by tokens. Quick demo of how the platform works. We've been doing this in private beta, currently deployed on the Polygon network, also in the Ethereum network, and in Celo recently. And we built a backend on, I mentioned the private beta because it's not open, but we have built it to be permissionless so that any creative, once allowed into the platform, can define their own supply tokens, price, and whatnot. Obviously, we take them in hand to hand so that they can, so that the numbers make sense from a point perspective of the underlying asset. This is basically royalties, ticket sales, and other productive assets that creatives are actively productive with. So once we agree on the token configuration, then we can go ahead and publish it on our dApp, which is what you have currently live on stakes.io, where fans or any collector can actually come buy these tokens. What's really cool about our design is that artists can immediately, as soon as that transaction is validated on the blockchain, can immediately withdraw the funds, again, leaning on our solution for providing financing at the forefront. And lastly, the most interesting thing, I think this is our model case for what is the creative economy Web3 solutions that we see today, is that we intend to give you the ability to collect. This would be the typical memorabilia utility, but most importantly to earn, and this comes to the financialization arena that we focus, coming from the royalties, as I mentioned earlier, ticket sales, to actually allow these productive underlying assets to become feed or fuel for future productions on chain. And lastly, this, by the way, is sharing for both fans and artists. Yes, there's splits right here involved. And lastly, they can also cash out on the secondary market, as we know, things such as OpenSea, etc. A bit of our traction, we've tokenized now, it's 27 productions, sold roughly 70,000 euros so far, worth of tokens, worked with 10 music labels and promoters. Worth mentioning, we do B2B, we've learned throughout our journey. So we're sticking to music professionals with an established, let's say, community, audience, and brand. And we've built a community in our Discord server with 2,000 collectors, followers, music, creative enthusiasts, backing all 35 artists so far. These are some of our competitors. You might recognize startups working in the royalties and digital collectible space. And our market size is mostly addressing the creative space. What we foresee is bringing, again, these creative assets on chain, and most importantly, seeing the financialization power that can be extracted from these assets. Here's some of our tech and investment partners, music partners. Mostly, this is an ecosystem of music creatives and other networks, which we're tapping in and enabling actively with a good pipeline for us towards 2024. Our platform fee and business model is simple, 10% take fee. And this is our team, mostly myself, from a finance and fintech background. I've worked for banks. I used to be a trader, and really found my passion in blockchain and music tech. And I found Martin and Tom alongside senior engineers who we've been working together in Web3 already for 3 years. So we define, solve, and execute quite frictionlessly these days. We're also backed by our marketing, a business development team, and obviously community managers, and our diverse team. We're a remote team working from several parts of the world. And most importantly, our roadmap in the future, our ask today, is to help us build what we mentioned, the new financialization layer of these royalties, event tickets that will soon be represented on chain. We want to highlight the importance that this we envision of these assets coming in the very near future. More importantly than loyalty programs and many other things that I think are these megatrends that we're looking at. And here, just a very quick use case we're working on how small, medium enterprises such as labels, large promoters, can become asset originators, so that liquidity pools can, in the very near future, serve these are real world assets we're addressing. And lastly, yes, this is our ask. We're currently we have launched our seed round towards 1.5 million to allow us to reach 2.2 million in tokens, reach the 350 projections that we're measuring towards 2024, and reach our large community to really make start building this as a new next generation solution for now all these projects that have entered the Web3 space, and creatives, most importantly. So thank you very much. And again, we look forward to hearing from you, and appreciate your feedback on our project.
Thanks very much for that, Luis. I'll pass the time to Martin and Max.
Hi, Luis. Thanks for the presentation. It would be great to have a bit more of a breakdown on the traction, the creator that you've been working with, and how you have acquired them. It would be good to go see what's behind the numbers a bit.
Sure. So far, roughly, we've done 27 productions. This refers to specific token instances that we've had on our dApp. So that kind of a back end that I showed, putting it on our production, and then successfully being able to attract at least some level of token sales. So far, those productions have given us, all these productions in aggregate, 70,000 euros token sales. Half of these have been materialized in the last 6 months. Especially with good interest and traction on the event side picking up. And mostly these labels and promoters are mostly related to these music partners. So we have entered mostly music tech associations, most active in UK, Ireland, and Spain. And through these music tech associations, we're kind of evangelizing interest in Web3. We see lots of interest from these partners. Slowly walking with them hand to hand to enable their projects in Web3.
All right, thank you for that.
Thanks, Max.
Thanks, Luis, for the nice pitch. If we look at how it works, I see very small logo of Spotify. So how do you're integrated with Spotify? So I can play the music via Spotify, but up front, people can raise the funds to create new music or do additional things. Is that the case?
Yeah, that's a good question, but no, the answer is no. This is actually our current live website I'm showing on screen. And what we have currently is just an embed of Spotify to showcase the music. But I do understand where your question is coming from as to how could this be related to the royalties that we have in our pitch. So the very short answer is we still today see a mismatch between the Web2 source of revenue, which would be what you see on Spotify, and the actual Web3 ownership. So this is what we're working on into streamlining these from the back. So we work with publishing companies at the moment. We really like what Gala is doing, Audius is doing, Web3 companies, and then we're working and pulling these, connections so that we can, in the future, have this Web3 or on-chain music consumption that you might be referring to, but not today. It's an infrastructure limitation in our view.
Yeah. And then you're also because the very big artists will go to other platforms. Maybe you touch upon a specific target group.
Yes, so far is what we would call a mid-tier creative. So this is purely B2B. We need we target audiences ranging for 20,000, 50,000 followers or people, communities behind them, and then we start doing the tokenization of their assets and engagement in Web3 communities, tokens, giveaways, NFTs, and whatnot.
Okay, thank you.
Thanks, Martin.
Thanks very much for that, Luis. We will now move on to the final startup for today. We have Raise Farming.
Hi, everyone. Happy to be here.
Hi, Emiliano. Yeah, you can just start whenever you're ready.
Beautiful. Thank you. At Raíz, we're leading the urban farming evolution. Raíz means roots, and we're building the roots of a new food system. Now, we know that the world is in need of fresh, local food system, and that's what we're creating. We've seen others try to do it, and this problem is real. We have centralized long supply chains that are hurting people and planet, and it's undeniable that climate change is a reality, and it's putting food security at risk, especially in cities where there's a lot of population growth, and we have centralized and loss of arable land that is not allowing us to reach all the people, especially as the population grows. Now we've seen vertical farms aiming to tackle that at a macro level. They are costly to build and operate, but also once they are up and running, the energy has proven to be the industry's Achilles heel, just not allowing to have profitable unit economics and also being really hard to finance and scale. So what we're doing is blending nature and technology through these centralized models, and especially focusing on two key angles. One of them is the energy side. So we're making them very energy efficient. This is our concept farm operating in Lisbon. And on the other hand, we're decentralizing the CapEx, so that allows us to scale up faster, increase liquidity for our network, and basically empower communities to deploy their own climate positive and cash flow positive farms. The way we're integrating refi, regenerative finance, and Web3 is through this liquidity and scalability and traceability protocol. And the way we see it is that this can allow us to create a flywheel of growth. So of course it's a CapEx or let's say hardware heavy protocol, but what if we start decoupling and leveraging digital technologies to allow communities to co-finance, co-own new farms across the world? Now this is what we've built. It's already operational in Lisbon. It's a profitable food, water, energy ecosystem. Again, we're optimizing for energy consumption, reutilizing all of our waters. It's a closed loop cycle. And of course, we're using zero pesticides and much less water than traditional agriculture. And at the moment, we are delivering the crops to restaurants, holding experiences, educational, basically validating and optimizing the model so that we're able to then scale through a network or farming as a service, franchise model, so to speak. So we're starting by tapping into hospitality, again, like restaurants, food services. We've had quite a lot of demand on that side. We have more than we can handle, so that's why we're launching more farms. But then we're scaling through retail, right? We want to reach the families, we want to reach the people. Everyone that goes to a farm wants to take some plants home, and that's also how we know we can make a wider impact. Now, how do we stand out against others? You might have seen some companies failing, sadly, such as InFarm, AeroFarms. And so two key things, again, the energy angle. So we have managed these algorithms that allow us to optimize our LEDs and also our internal energy consumption. So it's not over-engineered, just basically optimized so that we can run profitably. And also thriving through our community and design, right? So that's where community and crowdfunding and this co-ownership model comes in. How we're scaling up is farming as a service, right? So the way we see it is we empower future franchisors or farm operators. We have now a couple in the pipeline, and we can help them finance the capex through DeFi or refi. So that's where, let's say, the Web3 element goes a bit deeper. So we're turning our vertical farms into investable digital assets to unlock funding. Right now, we're working with Celo and your protocol. And the way we want to do is basically to create this smart layer of tokenization for our farms and being able to plug cross-chain and even to be financed by real-world asset DeFi platforms, namely Centrifuge, etc., with which we're in conversation. So we can finance these new farms and allow us to scale faster. And then that is afterwards, but we can also build a traceability protocol to earn from the savings that we are seeing and the optimizations climate-wise that we are doing through growing food locally. Now, this is how it would look like. Basically, crowdfunding the capex to unlock the growth. Right, so people, this is already live on the testnet on Celo. People can invest in a farm, they get an APY, they earn from the produce sales of future vertical farms. They don't have to be wherever they are, right? So this is a global angle that allows us to finance farms all through the world. They earn from that, you can track your impact, and then you're incentivized to grow more, right? So the way we see this really scaling up is being able to create, again, these flywheels and network effects that allow and empower other people to grow the farm themselves and the farm network. This is what we have achieved so far. We have a profitable farm here in Lisbon. We've grown a wide variety of crops. We can grow all the way from vegetables, leafy greens, microgreens, etc., focusing on high-value crops to begin with, but really aiming to expand that crop mix. We receive a couple of awards, especially on the refi side of things, where we can, again, leverage crowdfunding and strategic real-world asset DeFi funding for growth. And we're ready to scale. So we've secured supply chain partners that can help us deploy up to 10 farms per month. So that's something we're excited about to reach and to get going. Bit on the team, we have a wide team. This is just the core founders, but ranging from software, design, operations, business, background in both energy, engineering, and Web3. We have also like feature other team members on the wider scale, agronomists, blockchain developers, React developers, etc. And we are backed by serious advisors all the way from the in-farm and more vertical farming field, but also on the tokenization and Web3 layers you can see here from different players, which are with us
very much
to help us achieve this vision to have climate positive farms worldwide. Thank you.
All right, thank you for that. I'll just pass the time to Max and Martin for some questions.
Go ahead, Martin.
All right, thanks. Thanks for the pitch. Interesting concept. Is it right that the farm you show as a concept has a cost of around 100,000 euro?
A cost of the concept? No, it's around more 50K, no, less than that. The concept farm.
And then the farm, because there's a nice picture, but I imagine there are some more plants inside, because you show that you can get really some revenue out of it. So it almost looks good to be true, to be to be open there. But that's because the new way of doing it. And I think that what I see in the farm is just a few plants on the outside, but there will be more inside or on the top or something like that.
Yes, absolutely. They're designed for a capacity of 100 kilos per month.
Okay. And what kind of locations are you looking for to place those farms?
Amazing question. We're establishing partnership with both schools. That we've been quite receptive by schools, that they have a lot of space. So that's like an early adopters for areas, cultural associations, and public spaces like abandoned buildings, stuff like that, the plots that are not used and they want to reactivate and have this, let's say, attractive, sustainable assets on there.
Okay, yeah, because I can imagine that most of the governments, looking also in the Netherlands, they try to stimulate people to eat fresh and healthy. And if you see this around also in a school, it will really stimulate also people to think in that direction and start eating healthy food, maybe.
Exactly. So I think government partnerships are going. I mean, starting here in Portugal, but worldwide there's an interest on that. We are speaking with them, just also aiming to go faster with the private angle while we work on this government side, which sometimes takes a bit more time. But yeah, it's a good point. Thanks.
My last question is the farms, you develop them and construct with the team, or because it's totally something different than from the digital arm, I would say.
Yes, sorry, just didn't fully get the question. If we're building them in-house, correct?
Yeah.
Yeah, we design them in-house. We do the engineering in-house, but we outsource the production. So the manufacturing is done by a third party under our supervision, of course, and with our design and tech specs.
Okay, thank you.
Thanks, Martin.
All right, Emiliano, thanks for the pitch. I only have one question. I want to understand, like, if you don't have the blockchain angle, like, what do you lose concretely?
What do we lose?
Yeah, what does it prevent you from doing concretely if you don't have the blockchain angle?
It's basically scaling up slower, right? So it's like going through traditional financing mechanisms and not really being able to create that flywheel and the network effect. So we see if people are able to have skin in the game in a vertical farming network, they are incentivized also to grow that. So it becomes part of this growing ecosystem. And also if, for example, from Mexico, no, if I want to launch a farm in Mexico or someone there wants to finance it, we can tap into this global network to help them finance and have people like really cheering for that. So I would say it really would slow down our growth and like decrease the liquidity and the scalability angle of it.
Okay, very clear. Thank you.
All right. Thanks, Martin. Thanks, Melissa, as well.
Thanks very much, Emiliano, Martin, and Max. We are officially, done with all the pitches, and we are able to move on to the next segment of our pitch event. So before that, let me just quickly run through some announcements that I have, and then we will get right to answering the most important question of the day, which is who are our top two teams. So, quickly, just firstly, our highly anticipated Season 4 Demo Day is back. So this features 8 of our best startups from our recent cohort. So you can join us on 13 December at 11 a.m. CET as we celebrate another successful run of our incubator and accelerator programs. So this will be the very first public preview of the best startups from our latest cohort, from our BFG Superstars and Adrenaline programs. So you can meet the founders, hear their pitches, and just check out the projects that they have been working on. So scan the QR code, register for the event, save your spot today. And another big announcement that we have is that the waitlist for our incubator and accelerator programs for 2024 is open. So for all entrepreneurs and early stage startups in Web3, or if you're looking to get into Web3, you can build your startup with Blockchain Founders Group. So register now and you can be the first to receive any news about our upcoming cohort. So so these are the two big announcements that I have for you. And right now we'll just move on to the most important conclusion of the day, which is the top two teams that we have. So today we heard from 5 startups, Trade Together, Reality Near, Heroes, Stakes, and Raise. So we are, the judges' scores are in, and I'm happy to share that the top 2 teams are Raise and Trade Together. So congratulations, you impressed the judges the most today with what you've shown us. To all the pitching teams, it's been a pleasure having you with us today. And we hope that the experience has been interesting, has been fun, and we really wish you all the best. With that, we would like to thank our judges as well, Max and Martin, for coming on, asking the questions, being such great judges as well. So thanks for spending the past hour with us and for making this event so successful. If you would like to get in touch with the teams, feel free to reach out to any of us on the team or myself. My email is over there. This event recording will be available on YouTube, and the link will be sent to everyone after this. And to hear more about Blockchain Founders Group, follow us on LinkedIn, on Twitter, subscribe to our newsletter. And we do have a post-event survey that you can scan if you would like to leave some feedback. So with not much else, I will be closing the event. I'd like to thank everybody for attending with us, be it on Zoom, on YouTube, and for spending your time with us today. Thank you.
Thank you so much.
Thanks. Cheers. Bye.
Great experience. You made my day. Thank you.
Thank you. Appreciate it.
Bye-bye.
Thanks,
Thank
Jack.
you. Bye-bye.